Peace. Welcome back to the Absolute Boss Collective. You're tuned in to another episode in the Let Us Begin series. In this video, we're going to cover some of the financial terms that you will come across dealing in the stock market, whether you're investing or day trading. Before we get into that, if you're new to the channel, mollywop that like button for me right quick. Turn on your post notification so you could be in the know when I drop new content. And most importantly, tell your friends and family. So now, let's get right into it. For terms concerning the bid-ask spread, moving averages, stock market sectors, and fundamental analysis, I have videos that go over all of those in depth. So I'm going to strive to leave links somewhere around here if I can figure out how to do that. If not, they're going to be in the comments. Okay? Now let's get into the terms. Bull market. A bull market is a market condition that means stock prices are expected to go higher. So you're going to see higher lows and higher highs. Bear market is the opposite. A bear market is a condition which investors expect the price to go down. So you're going to see lower highs and lower lows. Next, we have the term beta. Beta measures the relationship between the price of a stock and the movement of the whole market. If the ABC stock has a beta of 1.5, that means for every 1 point move in the market, ABC moves 1.5. Dividend. A portion of a company's earnings paid out to shareholders on a monthly, quarterly, or annual basis. Limit order provides instructions to only execute at, above, or under a particular purchase price. A market order. It provides instructions to execute as quickly as possible at the present moment. So you're going to buy and you're going to buy whatever that price is. GTC. A GTC order means that the order stands until you cancel it. Trading volume. The number of shares being traded each day. Public float. The number of shares that can actually be traded once shares insiders or early investors have are subtracted. Secondary offering. When a company's stock is doing well, they may do another offering to raise more money by selling more shares. You'll typically see this with a lot of the biotech stocks and penny stocks. The price will get pumped up, and once it gets to a certain level, they'll announce an offering and you'll see that price drop again. So be careful out there. Blue chip stocks. Large industry leaders offering stable dividend payments. ETF. Exchange traded fund. You can buy and sell them just like stocks, and they represent a basket of stocks. So if you ever watch any one of my $500 challenge videos, you'll see me talk about the SPY and the triple Qs. Both of those are ETFs. A stock symbol. A 1 to 3 character alphabetic rooted symbol which represents a company listed on an exchange. A derivative. A financial instrument that derives its value from the underlying assets. So futures and options are examples of derivatives. Accumulation, distribution. This looks at the proximity of a closing price to its high and low to determine if more traders are buying, accumulating, or selling a particular security. Balance sheet. A company's balance sheet gives an accounting of what a company owns, its assets, what it owes, its liabilities and the amount of capital that the company receives from its shareholders. Bond. Word is bond. A bond is a type of fixed income security that can be thought of like a credit instrument by the issuing party. Commodities. These are raw materials that are used every day by millions, if not billions, of consumers. Commodities are priced based on supply and demand. Growth stocks, considered to have the potential and ability to outperform the market in the future. Growth companies have generated considerable, sustainable, and better than average returns in the market and are expected to continue providing substantial returns. They are often backed by healthy and consistent earnings, robust past performance. Yield. Yield refers to how much income an investment generates separate from the principal. It's commonly used to refer to interest payments an investor receives on a bond or dividend payments on a stock. Yield is often expressed as a percentage based on either the investment's market value or purchase price. Compound interest. Compound interest is calculated on an additional principal balance that includes the interest on all the interest that has accumulated. Correction. In investing terms, a correction is defined as a statistical event where the price of a security or asset class experiences a decline of at least 10%. It could be more from the recent peak. Okay, so when the stock drops 10% or more from the peak, that's called a correction. Dollar cost averaging is an investment strategy where an investor buys a fixed dollar amount of a security at regular intervals regardless of the price. Market capitalization. The market value of a company's outstanding shares, and this metric is used by the investment community in ranking the size of companies as opposed to sales or total asset figures. Last but not least, options trading. This is the sale or purchase of a contract between a buyer and a seller in which the buyer of the contract is purchasing the right but not the obligation to buy or sell a quantity of a security at a specified price on or before a specified date. So that's 25 terms that I laid out for you guys. If you have any questions or comments, leave them below, especially if you come across a term and you want to know what that means, leave it in the comments below. The Let Us Begin series is dedicated to all you new guys and girls out there that want to get in on the game of investing or trading. This is your brother in trading and investing, Absolute, signing off for the Absolute Boss Collective. Peace.